What if I told you that right now, this month, thousands of pensioners across the UK are quietly missing out on money that's already sitting there, waiting to be claimed, simply because nobody ever told them it existed? Not a rumor, not a maybe. Real money tied to real rules that most people never check. This is not a financial advert. This is not someone trying to sell you a product. This is the plain truth about 7 specific costs and payments connected to your UK pension. Things that could either be costing you more than they should or putting money back into your pocket that you didn't know was available. Right now, something is quietly shifting in how pension support works in this country, and almost no one is paying attention to it. Before your next payment lands, stay with me, because what you're about to hear could change what you receive or what you're paying for the rest of the year. Let's start with what's actually happening, because the story here runs deeper than most people realize. The UK pension system was never built as one simple payment. It was built in layers: a basic pension, a state pension, top-up credits, and a web of connected benefits that only activate if you know to ask for them. None of these layers switch on by themselves. You have to know they exist, and in most cases, you have to actively claim them. So today, we're walking through 7 of these, one at a time, slowly, so you understand exactly what each one means for you. Let's begin with the first one, because it's the one every pensioner assumes they already understand: your state pension amount itself. From April 2026, the full new state pension is worth £241.30 a week, which works out to around £12,547 a year. But here's where things start to get serious. That full amount only applies if you have at least 35 qualifying years of national insurance contributions. If you have gaps in your record, time spent unemployed, self-employed with low profits, living abroad, or years spent caring for family, your payment could be lower than the full rate, sometimes significantly lower. And here's what most people are not being told. Many pensioners have never actually checked their national insurance record against the full 35 years. They assume the number they receive is simply what they're owed. It isn't always. It's what your record currently supports, and that record can sometimes be corrected. But wait, it gets even more surprising, because cost number 2 connects directly to that gap. It's called voluntary national insurance contributions. If you discover you're missing qualifying years, in many cases you can buy them back. For certain years, this can cost as little as £3.65 a week if you were self-employed with lower profits, and buying back even a single missing year can add meaningfully to your weekly pension for the rest of your life. Stay with me, because this next part changes everything. There are strict deadlines for how far back you're allowed to buy years, and those deadlines shift over time. Missing the window means that gap becomes permanent. This is not something to think about eventually. If you suspect a gap exists, this is worth checking now, while the option is still open. Now let's slow down, because cost number 3 is the one I really want you to hear carefully: pension credit. This is a separate, means-tested payment that tops up your income if it falls below a certain level. And here's what most people are not being told. From April 2026, the standard minimum guarantee is £238 a week for a single pensioner and £363.25 a week for a couple. If your income, including your state pension, falls below that line, pension credit can close the gap. And here's the detail that surprises almost everyone. Hundreds of thousands of pensioners who qualify for pension credit have never claimed it, often because they assume owning their home, having modest savings, or receiving a small private pension disqualifies them. In many cases, it doesn't. Even a very small pension credit award, sometimes just a few pounds a week, can unlock support worth far more than that amount alone. And this is what most people are not being told about cost number 4, because pension credit isn't just a payment on its own, it's a gateway. Once you're awarded even a small amount of pension credit, it can open the door to housing benefit if you rent, help with council tax, free NHS dental treatment, and support with heating costs. And when people think they understand this, they miss one key detail. This connection is exactly why checking your eligibility matters, even if you think the amount itself sounds small. It's rarely just about that one payment. It's about everything attached to it. Now here's where things get serious again, because cost number 5 is tightly linked to pension credit, the winter fuel payment. In recent years, the rules changed so that this payment is now largely tied to pension credit eligibility, rather than being sent automatically to every pensioner as it once was. That means if you're not claiming pension credit, even if you're entitled to it, you may also be missing out on winter heating support. This single change is one of the most important reasons to check your pension credit eligibility properly, because it's no longer just about the credit itself. It's connected to a payment that directly affects how you heat your home through the colder months. Stay with me, because cost number 6 hides in a place most people never think to look: your council tax bill. Many local councils offer council tax reduction schemes specifically for pensioners on lower incomes. And depending on where you live and your circumstances, this can reduce your bill significantly, sometimes down to nothing at all. Here's the detail that catches people off guard. This scheme is run locally, not nationally, which means the rules and the amount of support can vary from one council to another. If you've been paying full council tax for years without ever checking whether your specific council offers pensioner support, you may have been paying more than you needed to simply because nobody flagged it for you. And finally, cost number 7, the one that hides in plain sight: everyday NHS and household costs that many pensioners still pay without realizing they may not have to. Once you're over 60, prescriptions in England already become free through age-related exemption in most cases, but dental treatment, glasses, and other costs can still apply unless you're also receiving pension credit, which unlocks fuller NHS cost support. On top of that, pensioners over 75 who receive pension credit can also qualify for a free television license, something many assume ended for everyone. These are small things individually, but added together across a year, they can quietly total a meaningful amount of money, all connected back to that one central question: whether you're claiming pension credit in the first place. So now you understand what these 7 costs are. But here's the real question, the one that actually matters. Why does this keep happening? Why do so many pensioners go years without ever hearing any of this clearly explained? The honest answer isn't some hidden conspiracy. It's simpler than that, and in some ways more unsettling. These systems exist quietly, because no single office is responsible for calling you personally to check. The Department for Work and Pensions doesn't ring you. Your local council doesn't ring you. Every one of these 7 things requires you, or someone helping you, to take the first step and ask. And once you understand that, the picture changes completely, because the power was never truly out of your hands. It was simply waiting for you to reach for it. So how do you actually take that step? Let's keep this simple, because it doesn't need to be complicated. Start by checking your state pension forecast and your national insurance record directly through the official government service, so you know exactly where you stand. If there are gaps, ask specifically about voluntary contributions and the current deadlines before they close. Then, regardless of how confident you feel about your income, use the official pension credit calculator to check eligibility properly, because the rules are more generous than most people assume. If you qualify, ask directly what that unlocks: winter fuel payment, council tax support, NHS costs, and housing help. And finally, contact your local council directly to ask whether a pensioner council tax reduction applies in your area. None of this requires a solicitor, a financial advisor, or a fee. Every one of these 7 things is checked and claimed directly through government or council services at no cost to you. The only thing it costs is a phone call, a short online check, and a little bit of your time. And here's something worth holding on to as we close this out. This isn't about blame, and it isn't fear for the sake of fear. It's about awareness, because awareness is the one thing that changes everything. The same pension payment that felt fixed and untouchable a few minutes ago is now something you can question, something you can check, something that might already be entitled to more than you're currently receiving. That shift from assumption to clarity is where real relief begins. If you've made it this far, you now understand something that many pensioners still don't: that behind your regular payment, There may already be support in place that was built specifically for people in your situation. This isn't just information, it's something that can genuinely change your monthly budget. Stay aware, stay informed, and don't let another payment pass by without asking the question first.